Welcome back to the BI Breakdown. And today I have with me Stephen Nagy. Stephen, thanks for being on. I'm going to jump straight into it. Tell us a little bit more about yourself.
Yeah. Hey, Robert, thanks for having me, man. It's, I have been in the financial education world for better part of 15 years now. I originally got into it out of college, just not having any idea what I wanted to do when I grew up, so I actually moved. I grew up in a little small town. I don't know where to start with these things sometimes when you ask these questions, Robert. So I'll let you drive the conversation. But long story short, grew up in a small little country town in the middle of Virginia, Southwest Virginia, actually, and moved to South Florida, to Cape Coral, Fort Myers area when I left college, not having any idea what I wanted to be, and started selling cars. So I got a job at a car dealership selling Lincolns and Mercurys. And one of my coworkers actually had just retired from Ameriprise Financial, American Express Financial Advisors. And, we just through chatting, in the car business, you kind of sit around a lot, waiting for customers to come in, things like that. And he was, always like, what are you going to do? What are you going to be? What are you trying to be? And, I was young, in my 20s. And I was like, I have no idea. He's like, well, listen, man, he's like, I can get you an interview at Ameriprise financial advisor, starts talking about what you do, financial planning and stocks and bonds and mutual funds and 401ks. And I'm like, this stuff's going over my head. At the time, I didn't know the difference in a stock and a bond. What is a stock? I had no idea. But I was like, hey, this kind of sounds cool. You watch these movies. I read a book called Liar's Poker, which, by the way, if you've never read the book, a guy named Michael Lewis, he wrote Moneyball. He wrote all kinds of really good books over the years, but I wrote a book called Liar's Poker. Check it out if you've never read it. So I read that book, and it's all about the stock market. If you've watched like the Wolf of Wall Street, it kind of that kind of vibe to it. Gets you into the stock market, and so I had in like my eyes this vision of, hey man, I'm gonna be a financial advisor, this big time stockbroker, all this stuff. So when I started studying, I got my Series 7, my Series 66, my Florida 215 variable annuity insurance license, and I started working as a financial planner with Ameriprise Financial. And so that was kind of my introduction to the financial world, Robert.
Man, okay. It's great. So obviously that can tie you over into working with insurance products, and we know each other from both of us being practitioners and teachers of what people would term the infinite banking concept. So for people that's watching this and doesn't know, obviously, like I said, it's an insurance product. It's just whole life insurance and being utilized as a banking system. So cash flow insurance. How did you? That kind of got you into the finance space. So from there, what launched you from just like being a financial advisor to saying, because obviously the cash flow insurance or infinite banking, as we would, it's not really being offered by financial advisors or spoken about inside that sector or that space. So what got you over into what we're doing now?
Yeah, so that's kind of the wild part about this whole story, is as a financial advisor, you would think that I would kind of know about, infinite banking and using whole life this way. I would know about different types of investments like real estate, alternative investments, things like crypto and precious metals. And at the end of the day, a financial advisor at a big firm like that, and most of these firms, whether it's Morgan Stanley, Merrill Lynch, Charles Schwab, most of the advisors at these big firms, at the end of the day, they are taught how to be salespeople. They're taught how to go out there and push products that make these big firms and these big companies billions and billions of dollars. And they get paid well to do it, to be good salespeople. But, I realized that at a young age. I had done it for a couple of years now. So I saw that side of the world. And what we do today, Robert, just very similar to what you do, is we're more anti-financial advisor. You can see my hat here if you're watching a video, BYOB, become your own bank, become your own banker. And that's everything we do, is how to take back control of your money and solve your money problems. And we do that through alternative investing. We do that things through real estate investing, through being smart, using these whole life policies and following the infinite banking concept. So from a traditional advisor, I actually got my start in alternative investing in real estate. One day I was invited to one of those free seminars. I don't know, they still kind of do them nowadays. They kind of went down a little bit after COVID because nobody was really meeting in person. And so you still see them occasionally, but back in this was back in the mid 2000s, they were everywhere. You know, I mean, how many of you saw an infomercial, you know, come learn how to flip houses, make millions of dollars in real estate investing. So I got invited to one of these free seminars. So I went out with my cousin, his name's Brent, and we went to one of these free seminars, and we sat there and watched them present at the front of the room. And they were talking about making all this money in real estate and how you can control your future and becoming an entrepreneur and saving money in taxes and all this stuff. And I'm like, man, this sounds pretty awesome. Like, you know, I thought financial advisor was the route to go, like build a career around that. But, you know, at the time I was working 65, 75 hours a week. I had no life. I was in my 20s. I was like, man, like, how long do I really want to do this? Like, I didn't love it. And so when I heard this real estate investor start talking about all this stuff and building all these dreams, I was like, man, that sounds pretty cool. Like, maybe that's something I can do on the side. And so we actually invested in a 3-day class, and we went and attended it, and it taught us some basics about real estate investing and some basics about owning a business and being a business owner and entrepreneurship. And a lot of it made a lot of sense to me. And I was like, hey, like, this sounds pretty cool. Like, let's go out and try some of this. So we went out and we started implementing some of the stuff we learned. We started with some wholesale deals. We were able to acquire a couple properties after a little bit of time. So I started doing some real estate. And at the time, I was in Fort Myers, Florida, Cape Coral, Florida, and there was a company there that actually did those seminars. So they, through some local connections, just being in that area and knowing some other local real estate investors, we got introduced to the seminar company, which shortly after I was introduced to them became Rich Dad Education. Now, Robert, have you ever read anything by Robert Kiyosaki, Rich Dad, Poor Dad, Cash Flow Quadrant,
Yeah.
any of that? Do you like Kiyosaki by chance?
Yeah, he's awesome. Actually, he's why I'm a big precious metals advocate. So Rich Dad Poor Dad, Robert Kiyosaki was definitely a huge impact on my financial education. Absolutely.
Yeah. So when I was young, like, you know, I was, you know, at that point in time, and I was in my mid-20s. I'm 41 years old now, just to give some perspective here. And so, you know, in my mid-20s, I get introduced to these Rich Dad Poor Dad books and, you know, the whole cash flow quadrant and the cash flow game and, you know, all these different ways of looking at money and investing. And I'm like, man, this is going right along with what we're doing in real estate. And because the company was based out of Cape Coral and because of what Brent and I were doing with our real estate business, they were like, hey, how would you guys like to start traveling and sharing with other people what you're doing in real estate and some of these techniques that Robert's teaching? How would you like to share that with others? Now, Robert, again, let me just, you know, take a step back. Again, I was in my mid-20s, came from a little small town in Virginia where most of my friends never even left the state of Virginia. And they're asking me to go out there and travel the country every week to different places, go out to California and Las Vegas and Phoenix, Arizona, and Seattle, Washington, and Portland, Oregon, all these cool places that I never thought I would ever travel to, let alone get paid to travel to. And they're like, go out there and do that. So I was like, awesome, man, sounds great. So I actually made a decision at that point to quit as a financial planner with Ameriprise Financial and change my trajectory in life. And I said, you know what? I love real estate. I love what I'm doing. This whole entrepreneur journey is really, really cool. Let me go out there and share it with other people. So I started traveling every week on the road, showing others how to get started with real estate investing, learning about sales, learning about public speaking, learning about all these different aspects of business. And along that journey, you also start to meet other people. So at these real estate events, you would meet other real estate investors. Through the business and speaking, you would go out and you meet these high-level investors and business owners and multi-millionaires and 100-millionaires. And so I started building my network over the years, traveling around doing these events. So it just naturally started to progress to where, hey, you know, this entrepreneur thing is really cool. So over the years, you know, I've always had real estate as my foundation. And then over the years, I've always kind of started to implement other stuff into my life. So I've started a few different businesses. I had a swimming pool maintenance business at one point that I built up and sold. You know, I've had different real estate businesses that I built up and sold and different things along those lines that over the years, I've just always kind of had that foundation of real estate, and then I've had other entrepreneur ventures that have spun off of that. Now, Robert, before we go too much further, let me just say this. Have you started many businesses in your career?
So I've always been more along the lines of sales and more so in the I quadrant. So
Okay.
I like to, if I can, invest into a business or invest into some kind of a startup. Um, are you familiar with Ripple, the company at all?
Yeah.
Yeah, so like for an example, that's a company I believe in. I have some private equity shares inside of Ripple, as well as as some other startups as well. So I'm right now working with another company too, an autism company, and it's an autism service company, and so impacting the autism space, and trying to help cut down on just help with retention and cut down on turnover, because obviously it's going to be kind of hard dealing with autism patients. So there's a lot of services being applied there.
Yeah.
The So yeah, man, I wouldn't say a lot of businesses or a lot of different startups, but my way of getting into a business is more so on the investor side versus actually starting a business, putting together all the operations, and then selling that business or merging it into another business. So
That's awesome, man. Let me ask you this on the investing side. Have you ever had any investments go wrong? Have you ever failed in any of those ventures?
yeah, yeah. Well, I mean, I think we all have, right? Lucky for me, I haven't had like terrible losses. Uh, I've had uh, I've had people not do the best by me in certain business situations, and I've invested in stuff where I have not taken. I didn't profit from it, but I haven't had terrible losses. So I'm blessed to be able to say that. I do a lot of fundamental groundwork behind whatever it is I put money into, which is why I like the infinite banking concept, as people would term it, is because it has like a safety net feature to it,
Mhm.
whereby I mean, the only way to kind of mess it up is to just do the opposite of what the concept of being your own bank is about, right? So if you just don't pay anything back, and you just, you don't treat the policy like a banking system, and in the ways that we're talking about it. So, I mean, everything I've pretty much put a good amount of money into. I've did a lot of research behind it. Like I know Bitcoin. I mean, I remember back when it was $3,500. Everybody's like, "Oh, it's going to get banned by the government. It's going to get shut down." All sorts of stuff. I was buying Bitcoin because I understood and knew, like, this is not going anywhere. This is technology. You can't really ban technology. I mean, you can, but it doesn't go away. So like TikTok would be another example. They want to ban TikTok. Does that take TikTok away? No. It just makes TikTok a black market item, just like everything else. So
Yeah. Yeah, man. It's to me, like those failures are what really, get you kind of, understanding that like doesn't matter even when you fail, like you can still push forward, you learn from those lessons. And so if you skip forward to this day to day from where I was a financial advisor, got into the real estate business, multiple businesses, and built stuff up. Today I run the Money Multiplier, the BYOB money school agency. I co-founder and partner in the Private Money Club, and we help literally thousands of clients and students every single year take back control of their money and solve their money problem. Manage a huge team of agents and salespeople. And with all that, everything looks great today, but it's hasn't always been, wins. It hasn't always been success over the years, and that's what I really like to let people know is, you're going to have failures. I've started businesses that I lost money on. I've had investments that I've lost money on. I've had real estate deals that have gone bad and we've lost money on, and if you're in the game long enough, you're going to come across those. And it's how you learn from those and how you move forward from those that I think really defines what your future looks like and what you can take from that. So, I just want you, if anybody's out there and they're trying, like, keep pushing, keep trying, keep going, because, COVID was such a great example. I mean, there's a lot of young people probably listening to this that maybe didn't go through 2008. 2008 was tough for a lot of people, myself included, with business. The economy crashed, real estate crashed, like everything was rough. A lot of people forget about that, or maybe weren't old enough to really understand what that impact was like. But most recently with COVID, I mean, how many people lost jobs was unexpected. I mean, my relationship with Chris Noggle started in 2019 when we started a seminar company, launched it at the beginning of 2020, and the whole thing got shut down when the country got shut down because of COVID in March of 2020. And so we had to pivot our entire business model completely got wiped away because we can no longer go out and do live events. So we pivoted, we learned virtual, we learned Zoom, we learned online marketing. And over the last 4 years, we've really been able to build that. And at the end of the day, it's a beautiful thing because I don't have to go out and leave my family every day or every week to do events. I can sit here in my home office when I'm here and I can run things from here. So it allows me. So you always want to figure out ways in life to turn a negative, turn something that could be devastating into a positive, and how to use that to move forward. And to me, that's what business is all about. Entrepreneurship is all about. And I couldn't stress that enough though, Robert, for real.
Yeah, so you came into kind of how you came into the concept is from you were already in the financial education space and you knew about real estate, which I'm sure you and Chris had good conversations about. You know, Chris is all about real estate as well. And that kind of led you into doing what we do now is, you know, being like a money mentor. One big thing, I know you said, you know, you're talking about the role you play at the money multiplier. And I've always played like that money mentor role in terms of like, and be just being an agent, not necessarily uh, higher roles, I would say. But the it's interesting to see kind of the things we've been able to build out for people and the different tools and techniques that we have to help people become their own bank. And I know that that's a huge responsibility that you do have. One thing that would be interesting though is you have a financial advisor background, myself included, and Chris does as well. So I was thinking, you know, it's from some of the talks that me and Chris have had. I know we talk about real estate a lot of time. We might need to start expanding into. That's what I love about my love about the channel I have is because it kind of brings everything into the concept itself and not just focus on being your own bank. But hey, like realistically, what does it mean to be your own bank? Well, banks do have speculative assets. Banks invest into a lot of real estate and a lot of different things. Banks have money in a lot of different sectors in a lot of different places. And I think we have to expand on just what we talk about. And it'll be interesting to see if we couldn't have alternative investments being spoken about more. That's one thing that me and Chris have been doing. So I see that coming for the money multiplier where we talk about more things, especially like right now you have a big crypto craze. A lot of people want to know and understand NFTs and what's going on with that. And that's, I mean, honestly, that's been my space. Um, really understanding the technology and what's coming. Blockchain technology is here to stay. It's going to change the world. It's even going to change infinite banking as we talk about it and as we know it, because a lot of things will be digital and it will change the way contracts are done as well. I think a lot of these contracts will be all done digitally as well. So it's going to speed up the process of even like underwriting and a lot of different things in the space that we're in. So everything can kind of use an update, and I think that's I think that's what we're seeing moving forward. So you said you got into infinite banking, kind of from like I said, being in financial education space, took some losses.
Well, hey, real fast, let me clarify on the infinite banking side, real fast, Robert, just on that note. You know, when I met Chris in 2019, we were building a seminar educational company, and our model was to teach real estate investing on the front end and then follow up with a presentation on infinite banking and the infinite banking concept and how that works. Now, follow me on this. Here's what's wild about this whole thing is because of my background in financial planning, as well as my real estate investing background in the financial education industry, I thought I knew everything. And it was a big mistake. I thought I knew all the strategies. I thought I knew the best way, you know, how to use money, the foundation of money, you know, be smart with it using self-directed IRAs, for example, when it comes to retirement accounts and all of that whole part of it. And so when we started this company, I actually had zero knowledge and zero faith and didn't understand infinite banking at all. I knew nothing. And so when we were building this, Chris was like, yeah, I'm going to do this presentation on infinite banking. And I would watch him do it. And I would see him do it. And I'm like, that's just a gimmick. That's like a sales thing. Like you're just using that as a way to get people in here. And I didn't even give it two thoughts because I was almost jaded from the industry, because there's a lot of gurus I've met over the years that they care more about sales and money than they care about people. And when I first met Chris, I didn't get that feeling from Chris, but I thought this infinite banking thing was just a gimmick, for lack of a better word. And it wasn't until COVID hit and we actually had done a few events that I had the time to say, okay, let me now spend some time to actually learn what is infinite banking. Because the more times I saw Chris talk about it and do presentations, it started to click in my head like, wait a minute, this guy is actually teaching stuff that I've just never learned about before. Like, this is legit. And like all the comments of, hey, we make a largely reduced commission because the client gets all the benefit. I'm like, who would give up their commission to give the clients the benefit? That's not the way the financial world works. It's always like, how can we maximize our commissions and our profits? But no, we were doing things the opposite way. So it wasn't until I really got in and read Becoming Your Own Banker, read Mapping Out the Millionaire History, read more stuff by Nash, got into the National Institute, started watching other people's content. I was like, holy cow, like, this is not only not even a gimmick, this is one of the most legitimate, we can't call it an investment. It's one of the most legitimate places to put our money and grow wealth that I've ever seen in my life. And so I became a huge advocate of it when I started my first policy in the beginning of 2020. And ever since there, I've challenged people for 4 years to show me how infinite banking is not the most powerful way to grow wealth. And I have yet to lose a debate on it. It's mind-blowing, Robert.
Yeah, I think what's crazy is actually, I think the concept that Rich Dad Poor Dad and what Robert Kiyosaki is trying to get across, actually infinite banking fits very well into that. So leveraging debt, not working for money, having money work for you. The fact that you can leverage an asset and the rich not paying taxes, those three things are big things that that Robert Kiyosaki talks about. And if you're thinking about it in terms of, okay, well, how can I not pay taxes? How can I do what the rich do, right? What is something that my poor dad would do inside that scenario? The poor dad's probably just gonna have a savings account, 401k, IRA, so on and so forth. This is more of a rich dad uh, paradigm shift, right? This is a rich dad tool. We're using the tool of whole life insurance inside of a way to where we can put money into an asset that grows our wealth, and then from there we can leverage it to then do other things tax free, while still be having liquidity and having solvency inside of our banking system. So we're just simply utilizing a tool that was already there and shifting the way people think about it. So I mean, it's amazing now, and now it's more full, it's more clear too with the explanation that you gave. I appreciate it. Of how you came into to where you're at now, and how we can move forward. It's going to be interesting. Like you guys were introducing people to it through alternative investing, and honestly, I think that's the best way to introduce it. I'm all for like coming at it from the infinite banking perspective, but also too, one of the things I love about Devin and I like about Chris and their marketing in terms of trying to get people to understand the concept is they always use real world use cases, and they get you in by talking about something that you already care about: cars, houses, so on and so forth, right? So everybody has a little bit different approach, but most IBC practitioners just beat you over the head with infinite banking, infinite banking, infinite banking. And that's one of the things I love about I do love about Chris and Devin is they have a very unique way of incorporating things that you already care about your day-to-day life into the infinite banking concept. So it's like, hey, you know, how do I get that V8 Mercedes Benz G wagon? How am I going to get this real estate? How am I going to do so and so? It kind of is it takes the outcome that you want, and then it walks back, right? Reverse engineer. How do we get to the G wagon? How do we get to the real estate property, and so on and so forth? And now you have a better understanding of, okay, here's why being my own bank is a good thing and how it works, versus just, hey, you need to be your own bank, you need to be your own bank, because it makes it seem as if that's the investment, when in reality it's not. It's more so just a tool, and it's a way to allocate your funds. So like precious metals, I don't see. I'm a big advocate and investor, as you can call it. I'm invested into it, um, and gold and silver. But I don't see it as an investment, because gold and silver just maintain value. They don't actually fluctuate. What's fluctuating is the US dollar, which is what gold and silver is denominated in.
Right.
So it's just kind of how you look at something. And I think that there's going to be an even larger paradigm shift as banks continue to fail, and we see a lot of problems inside of the traditional financial system. But thank you for bringing that into it. What are some of the ways you've been able to utilize being your own bank? What are some examples of that?
Yeah, I mean, so I started with my first policy in 2020, and at the time, I had a little later used it to pay off some debt that had occurred throughout COVID, just from a lack of business going on, essentially. So that was the first use of my policy, was paying down debt. From there, I started. Let me think the progression. I started a second policy for myself in 2021. That policy I've been using just for various business expenses, different purchases when I need to buy things for the studio. And I had some taxes due. I used to pay some taxes.
How much debt were you in, if you don't mind me asking? If you're okay with sharing?
Yeah, just on the business credit card side, I was probably around like 60,000.
And you were able to get out of that using your policy?
Yeah, that's been paid off. It took not too long, but yeah, I took the loan from the policy and we did the recapture and all of it, and we had it all mapped out. So, and we could talk about that in a second. And then the second policy I've just used, and then I started a third policy for my son, who at the time was 6 years old. So this was 2 years ago. He's 8 now, 6 years old. And so far, that policy I've just been letting build. We haven't used it for anything yet. But the plan is for any expenses that pop up for him to use it for that. But more importantly, when he turns 16, for a vehicle, and then when he gets to college, using it for college expenses and whatnot. So that's a really, really cool policy. If you could start these when these kids are young, by the nature of these policies, the more time, the better. And so, when you're dealing with compounding interest, the longer it compounds, the more powerful it is. And so I'm super excited for him. And not only, is it going to provide financial benefits for him at that time, but at some point, I'm also going to teach him how to use the policy for banking purposes. So imagine, you're 16 years old and you're learning how to never finance something and throw away all your money and make the banks rich. And instead keeping that all within your financial life and recapturing all your money for purchases. And so not only is it a financial benefit, but more importantly to me, it's the education benefit that we can do with this for children, which I think is amazing. And, Robert, go ahead.
No, I'm sorry. I didn't mean to cut you off. I was just saying it's really powerful what you're doing, because you're putting them in a position to actually tell a story that 99% of the planet, not just Americans, won't be able to say. Like, you're not going to run across a lot of people that's like, yeah, I've never actually needed to really use the bank. I don't have the experience that you have with credit cards and so on and so forth, because I financed pretty much all of my purchases through my family banking system or my own personal banking system. And that's something, I mean, that's almost priceless, man. So I see that perspective and of what you're saying. I also took a good note of what how you were saying I have different policies for different things. And I think that's another thing, like I was saying with the real world use cases. Well, you're looking at a car purchase, future car purchase, college, also too. Well, I got out of some debt with this other policy. And the only other thing I was going to ask you along those lines is just like, how long did it take you? Because I know a lot of people, they think like, well, even if it's possible, it has to take you, well, $60,000 in debt. It had to take them like forever to get out of this debt or whatever. But from what you said, your first policy is what, 2020? We're in 2024.
Yeah.
That's only 4 years. You've been able to get out of that debt.
Well,
and accumulate some wealth for your family as well.
And here's the cool thing about all of it, Robert, is you don't even have to guess anymore. What we've done with the experience that we've been doing this now for 4, 5, 6 years, the Money Multiplier has been doing it for well over a decade. And so what we've done is we've taken all that experience of building these policies, of clients' challenges and uses and everything that we're doing. And we've, over the last year or so, we've actually built tools to mathematically now show people exactly how quickly we can pay off whatever debt they have compared to doing it without a policy. And so what we do is we now, for all of our clients, we create what's called a debt blaster. And this debt blaster, we take all of your debts, your income, your expenses, we take all of that and we put this into this advanced spreadsheet, for lack of a better word for it, software called the debt blaster. And it mathematically shows you, A, how long it would take you to pay off all that debt, just doing it the way that most people do it. B, it shows you how long it would take you to pay off all that debt using the snowball method. And then C, how long it'll take you to pay off all that debt using the policy along with the snowball method. And when you see your specific situation and how much faster you can pay off that debt using the policy and following our strategy, it's not even a question anymore of if you're doing it, it's how quickly can you get this started so you can get that pay. I mean, in a lot of cases, using the policy and the snowball method, we're paying off debt for people in 20%, 80% of the, or let me think, a lot less than half the time. So if normally it would take, let's say 7 years, they're paying it off in 2, a lot quicker. And this is all mathematical. That's the cool thing about it. And if you don't have debt, that's where it really does get exciting, because now we can start investing. We can start growing wealth. We can start building wealth. I mean, I'm investing right now in equipment, forklifts. I'm doing private lending on real estate transactions. We own real estate, so private funds. So all these different types of investments now that I'm using my policy money. And what I'm doing with that, one of the tools we've created for that is something called a gains projector. So I can literally show you mathematically using a policy as opposed to cash, why it makes more sense to use the money that we're borrowing from a policy to invest in these investments as opposed to just using cash. It's just math. So we've created all this advanced tools to be able to mathematically show to people. And that's the cool part about all this.
Yeah, so it sounds like it's no longer theory, man. It's a fact that using your own bank, becoming your own bank, literally changes your life and the landscape of how you're doing things financially. That's awesome. That's a new tool. I was familiar with the first tool that you mentioned, was not familiar with the second tool when it comes to the gains projector. So I'm happy and excited to see that we're still building on things there. I know Hannah was telling me about some new exciting things that the Money Multiplier had coming. Like I said, I have some businesses that I'm a part of and I'm running on a day-to-day basis, but I'm definitely looking to expand more in my role with the Money Multiplier. I think it's important to bring in. I think we all bring something kind of fresh and kind of different. And so I think that's what makes us pretty strong.
Yeah, I mean, speaking about companies too, what we're doing right now, we're exploring different options with one of our companies on how to add COLI policies. So COLI, COLI, company-owned life insurance. And there's really, if you're a business owner and you have a corporation, there are so many cool ways we can use the infinite banking concept, these whole life policies, to build different advantages for your company, for your corporation. If you have partners, we can do buy-sell agreements. If you have, key employees or people that are really part of the company that you want to keep with you for years to come, we can build things what are called golden handcuffs, executive bonus plans. We can use these policies in corporations to do all kinds of really cool things. It's very similar to BOLI. If you ever heard of BOLI, bank-owned life insurance, and you had mentioned this earlier, Robert, when we talk about being your own banker, all we're doing really is mimicking what banks do. So we're putting our money into our banking system instead of their banking system. And then we're using that money in the same way that banks use money. So when the bank's in the policy, I'm not going to let it sit there. I'm going to keep that money moving just like banks do. If you go deposit $10,000 at your bank right now, the bank doesn't take that $10,000 and put it in a vault and wait for you to come get it. They take that $10,000 and they lend it to somebody on let's say a car note. And then what they do is they pay you 1, 2, 3, 4, 5% interest in a savings account. And then they're making 8% on that car loan and they're making that spread. And that's exactly what we're doing with our banking systems. And why do I buy real estate? Why is real estate part of my foundation, Robert? Because that's what banks do. Did you know, and you guys can research this stuff all you want. You can look it all up, but banks put over 90% of their M1 money supply into 2 different asset classes. Do you know what those 2 asset classes are? Number 1, real estate, and number 2, whole life insurance. Whole life insurance. banks are the largest purchasers of whole life insurance in the entire country. And so we're just mimicking these strategies that the banks are already doing. They're keeping their money moving. They're making spreads. They're buying real estate. They're buying whole life insurance. So we're doing the exact same stuff. And that's what we teach every single day.
Yeah, man, it's interesting. Is that you pointed out exactly the point I was trying to get across, is that we're not doing anything new. We're actually not doing anything extravagant. We're just thinking about it in a different way. Why does it make sense to be half a millionaire or a millionaire when you die, but all in between now and then you're broke? You probably need to be using some of that right now. You know, have access to that liquidity to change your life and the outcome of your, not only your life but your family's life right now and even after you're no longer here. So, man, I think you know, that about does it, man. I appreciate you being on. I don't want to, like I said, I don't want to hold you on too much. I know you've been pretty busy. You got a lot of things going on, as well as myself.
Yeah, I mean, I'll add one thing, you know,
Go ahead.
Robert, just real fast. You know, when it comes to your money, you know, you hear people talk a lot about the 95%, the 90%. You know, how the Social Security Administration tells us if you take 100 people at retirement age, only 5 people are actually going to be able to retire successfully, you know, the way that they want to. So that leaves 90 to 95% of the population in the United States of America, the richest country with the most opportunity, no matter where you're from in the history of the world, the greatest country, in my opinion, in the history of the world. That leaves 90, 95% of people that work their entire lives to not be able to enjoy retirement because they either have to alter their lifestyle because something happened, they have to work longer, you know, all these things. They can't retire the way they want to. And to me, that's a shame. And I saw that firsthand. So as a financial advisor, I would meet with these clients and we would talk about their hopes and dreams. And then I would have to bring them back to reality. Hey, if you really want to retire at this age and this lifestyle, you need to drastically change your spending habits today, or you need to take on a bunch more risk to be able to get you to where you want to be, or you're going to have to push back retirement, have to plan for longer. So not only did I see this and I hear about it, I learn about these different statistics, I saw it firsthand as an advisor. And to me, that's criminal. Like, why does that happen? So then when you start, you know, really exploring why that happens to people, you know, I've really boiled it down to what I call the 3 different wealth killers. So I just want to leave, you know, anybody listening to this, Robert, you with this right here, these 3 wealth killers. Because if you can eliminate these 3 wealth killers from your life, it's going to put you on a much better financial trajectory, no matter what else you do. Okay. So number one, taxes. How do we minimize and reduce taxes? Okay. So if you don't already have a company, an LLC, a side hustle, something like that, do that first, because the tax code book is like thicker than I can fit on screen. It's huge. And they do that for a reason. It's complicated. My tax mentor, he always says there's 2 tax codes in this country, one for the informed and one for the uninformed. Both are legal. So which one would you rather follow, you know, for the informed, right? So there's all these little tax deductions and write-offs and ways to reduce our tax burden to allow us to keep more of our hard-earned money. Now, if we keep more of our hard-earned money, what can we do with it? Whatever we want. If you're doing well financially, take that extra money you're saving on taxes and donate it. Charity. You spoke about autism earlier, Robert. I love that. My wife taught elementary kids with autism for 13 years. That was her career. That's why she went to college and got her master's and did it for 13 years. Now, you know, thankfully she was able to retire 2 years ago, and she started her own business and she loves it. She was just burnt out on teaching. Like, if there's any teachers on here, like, God bless you. Like, it is a very tough, you know, profession. And I feel, especially when it comes to kids with autism, but I love that. Like, take that money and donate it to kids with autism or different programs around that. Here we have surfers for autism that we can donate time and money to and things like that. But anyways, so taxes, like, take that money, or if you're not at that point yet, take that extra savings and invest it so you can grow your wealth, get you there that much faster, put it into your business, grow your business, whatever. So taxes, number one. Number 2, inflation. Inflation over the last couple of years is sky high. Okay. It's eroding the dollar. Robert, everything you've talked about, why you buy crypto, Bitcoin, all the rest of it. I love that, because those are all hedges against inflation. You know how else you hedge against inflation? Keeping your money moving. As long as your money's moving and making more money at all times, I don't care what inflation is doing, because my dollars are making more than whatever that inflation is. So instead of me losing money, I'm outpacing inflation and making more. So eliminate inflation. You got to educate yourself and learn how to do that. And number 3, volatility. One of the old things you always hear financial advisors say, oh, the stock market's always going to go up and down, but over time, it's always going to be a net positive. Yes, that's true. But what if you need that money at a time when you're getting ready to retire and actually need that money and the market's down? Okay, let's say in 2 years from now, you're going to retire, and right now the stock market's at all-time highs. You're sitting pretty. You're like already planning at your retirement. You're going to buy a yacht, and you're going to go on cruises, and you're going to go on vacation, and you're going to visit your grandkids. But God forbid, what happens if the market crashes later this year, next year? I personally think that's going to happen. And I think it's going to hurt a lot of people in this economy. It's going to take a hard hit. All of a sudden, your retirement, what happens? It's out the window. Can you afford to lose 30, 40, 50, 60% of your retirement and still be okay? Most people cannot. And I saw this firsthand in 2008, and I have a feeling it's coming again. So you got to protect yourself against this volatility. So the one thing that I really, really love about these whole life policies is they give you all of this. Okay, you put your money in there. What do you get now that your money's in there? Every dollar I put into my 4 whole life policies, I'm starting a 4th one right now. We didn't talk about that yet, but I started. So all the money I put into these, every dollar now is compounding, uninterrupted, guaranteed. It doesn't matter what the economy does, what the markets do. It's guaranteed growth, uninterrupted, tax-free. So I'm eliminating taxes within this policy, guaranteed, uninterrupted, tax-free growth for the rest of my life. So I'm already right there eliminating these wealth killers just by putting my money into this policy. And then as we've been talking about, the power of it is then I can borrow it out and use it for all this other stuff that I do, investing more businesses, growing wealth. And that's what really creates generational wealth, along with the death benefit that the policy has. And so this is all these things. So if you're going to start eliminating these wealth killers, and you know what I've actually done? I've been teaching the wealth killers for years, but I actually added a 4th wealth killer when I started to truly understand the power of being your own bank and using these policies. And that's interest. When you see how much interest is bled out on your mortgage, on your car notes, on your credit cards, on all these things that people finance every single day, you add that up over a lifetime, it is millions of dollars in most cases. So what if you're able to take that interest and keep that all within your family's financial world? And that's exactly what the infinite banking concept does, because all that interest that we would have been given to other people, now we pay that back to ourselves. It stays in our financial life. So I've added that 4th wealth killer, and I think it's just as important as the first 3. So if you can understand those simple wealth killers and how to start eliminating those, you're going to be in a much better position. And you just want to simply look at, okay, where is my money and how can I change one thing? Where that money goes first. Can I put that money into a policy first before I do anything else with it, or not? And if I can get it into a policy, great. So where's my money? Good, better, and best. My cash that I make has to go somewhere. I could put it under my mattress. I could put it in a Wells Fargo bank account, or I can put it into my own banking system. Under a mattress does nothing. It loses to inflation. It does nothing. Sitting in a bank, it loses to inflation. At least it's protected in a bank. You can use it. In my policy, I'm outpacing all the wealth killers. Good, better, and best. What would you rather do? Remember, putting your money in a policy, you change one thing, where the money goes first, and it's going to change your financial trajectory for your future. You're not going to work any harder. You're not going to work any longer. You're not going to take on any more risk. And at the end of the day, it's as simple as that. And as soon as you have that mindset shift that I could be smarter with the same dollars, it's going to change everything in your life. And then once you start this financial journey, man, if you're like me, it's never going to end. I'm just a student of learning. You know, Robert, I can't wait to learn more from you. I honestly don't know a lot about crypto other than what my brother tells me. And so when you brought up Ripple and Ether and all this stuff, like I've heard him talk about it. He's big on it. I just have never done it. I've never taken the time to learn about it. So I can't wait to learn more from you on that, as well as your knowledge, experience, and what you've done with infinite banking, your business, and everything else, man. So I love this relationship, and I really do appreciate your time and inviting me on today.
Oh yeah, man. Thanks so much for being on, Steven. You said you're coming to the symposium this year? Yes.
Absolutely.
Okay, yeah, man. I definitely can't wait to chop it up with you in person too, as well, man. It's an honor to have you on, and a lot of the things you talked about and hit on is something I talk to people and try to tell people all the time. It's good. It's always good to hear somebody re-emphasize some knowledge that you already previously believed in. So I'm right there with you, man. I don't have any disagreements on anything that you said, especially the four wealth killers. Those are things that a lot of people are not taking into consideration. And right now, also too, I agree on your market analysis as well, that we are going to have some kind of a major pullback. Not even a pullback. We're going to have a reversal, and we're going to see the economy actually show the real signs of what a lot of people that's in the know. We already know we've been in a recession for more than 2 quarters now, and it's going to start showing uh, economically on a way grander scale where everybody's going to understand it. It's not just going to be inflation; it's going to be the economy slowing down while we still have inflation as well. So, man, I appreciate you being on. Like I said, guys, for you at home that's watching this, better investments equals a better future. And we'll see you guys inside the next video.
I say I moved on, but I hate it that you gone. Yeah, I stayed out and grind for real. From a panoramic to a drop top, I still haven't signed a deal. I've been through terrible things, I guess still trying to heal. I dreamed the struggle was over, but dream never made it real.